live today, man. Can't complain. I was really spending a lot of time with the Lord, just thanking Him for everything, honestly. Yeah, I'm gonna just use my computer camera. As long as my mic works, that's all that matters to me. Let me see, where's my screen? Let's share. Usual. Mm, you guys can see my chart, right? Perfect. Perfect. Let's get active. See what UJ is working with today. Um, I was trading GU. I was trading honestly for the past 14 hours. Honestly, yeah, for the past 14 hours, I've been. You muted on my end. Seriously? You can't. Let me see. How about now? Hold on. Let me see something. Let me make sure everything is good. Because I know. Let me make sure everything is good.
Hello,
Yes, sir.
can you hear me, sir?
Yes, sir. You can hear me? Can you hear me?
Oh, it's still muted. I don't know why.
What
Um,
is? Let me see. Let me make sure I'm not tweaking. Boogie top mic. I hear you. Okay, Teresa, you hear me? Good morning, Leah. Do you hear me as well? Do you hear me as well, Leah?
I still can't hear anything. Let me. I might try to leave and come back. Let me see.
All right, Brody. All right. Perfect. Perfect. Can you guys hear me? Is everything good? You guys can hear me? Fine. Can you guys see my screen? We good? We good, money? All right, let's get active. Let's get active. Let's get active. So, I wanted to kind of break down this UJ trade here. I was documenting it earlier, the actual entry of it. I was able to get a clip of it with me documenting. I'm gonna document this trade here as well, but I'm gonna break down this trade and I'm gonna break down the GU trade as well because I documented that as well. So I'm gonna have the whole. That one was more of a like breaking down the trade, breaking down the system as I was actually trading it and explaining it. Because you guys know I'll either do sessions where I'm just trading, not doing um any talking or any explanation or any explain is just trading. And sometimes I'll do explanations. This session right now that we're doing is more explanation because I'm already in the trade and I'm looking to hold this trade for a lot longer, for about 100 pips up into 156 600. This is a nice trade that I can look to flow with for a decent amount of time. So since I'm already in the trade, we can chop it up. But when it comes to this UJ trade, right, and I want to explain how I've critiqued my system and made my system even simpler. If you look at the top, this right here, because I use this, but if you look at the top, there's only four time frames now. I only use four time frames, not four, three time frames. This right here was because I used this 1 minute to enter, but I'll talk about that in a second as well. But breaking down this UJ trade, what I saw was very, very simple. I had my resistance and I had my support. Since price was trading at support, I'm gonna focus on this. Price had this previous area of support where price held his support, and it also held his resistance and resistance. So that makes this a valid area. What I saw here was very, very key. Price failed to close above these bodies. One, two, three, four, five. That's over 20 hours worth of 4 hour candles, 20 hours worth. And price could not close above. And then price finally closed above. And this is where that break and retest comes into play, because price could easily close above, come back, and then close right back below, which would be that overlap. And if that was the case, sales would be a lot more valid. But price, this 4 hour candle closed above. And once this 4 hour candle closed above, all I knew is I didn't even have to go to the 1 hour time frame or the 1 hour time frame. I could just go straight to the 5 minute and just wait for price to pull back down into support for me to look to take buys. And that's what happened here. Price came down, lower high, lower low, lower high, lower low. Price came back down into support. It rejected it. I didn't enter here at first. Price came back up, and then there was a shift of structure because price broke previous structure, this structure point right here. Price broke structure. Now I have, because with the 5 minute, if I'm entering the 5 minute, it has to align with the 1 hour. The 4 hour, 1 hour already bullish. The 5 minute at that point in time was not bullish. At this point in time, when I seen this move happen, even though this candlestick pattern formed, the market structure on this 5 minute was still heading down. Price could have easily created a lower high and continue to keep trading lower, and then potentially created a higher high and do whatever. But price didn't do that. So once I wanted the 5 minute to actually shift back structure to go bullish, and that's when it did it here. So price shift structure, broke structure here, came back down, and this was a minor little area in between where price created this rejection area, rejected here, and even over here it held as resistance. So this is a valid key area. When price came down into support, I entered on the 1 minute time frame because I had all the confluences and I could get a precise entry. Price gave me this hammer candlestick right here, and as soon as this hammer formed, I entered the trade. As simple as that. And what I seen was just multiple confluences. I don't need any extra more confluences to make it a higher probability setup. It doesn't. I can have 50 confluences and still lose the trade. But for my system, it played out, and then on top of that, what formed as well was a shoulder, head, shoulder, an inverted head and shoulders. So that's even more confluences. Add an area of support. Market is overall bullish. Got my candlesticks, and I decided to put my. I didn't want to put my stop loss right below here because that would have been foolish. Because the price could have stopped me out, and the setup could have still been valid. So I decided to give my stop loss some breathing room, a little bit below this wick right here. And now I am looking to target for one was the high, which price is breaking through now, and price is coming up to the wick high. But price broke above the high. This is the first TP because I always look at my take profits as where this price has the highest probability of hitting first. This area, 1, TP 2, TP 3. Price has a higher probability of hitting this area first. So this is where I'm going to look to target first. And if price breaks above, price has a higher probability of hitting this area first before hitting this area first, which is why I have my levels in between. And with my trade management, how I'm going to manage this trade, I have my stop loss a little bit wider because I know this is like a 1 to 6 hour multiple, 1 to 5, 1 to 6 hour multiple potential. Once I'm up a 1 to 2, a 1 to 2 would basically be at the highs, and if price gets there, then I would just move my stop loss to a 1 to 1 according to my trade management system and continue to look to flow with this UJ trade. And what I want to see is I'm not going to scale in or add any positions right now. I want to see the same exact thing that happened on the 4 hour time frame happen on the 1 hour time frame. When price actually closed above, came down, retest, held a support, and continue to keep going long. I want to see that same exact thing happen for me to want to look to take buys, because well, scale in and add another position. Because what could easily happen is this candle could close above and then the very next candle close back below, which would create an overlap and price could trade back even lower. And if that is the case, I don't want to be in the trade because that is not valid for this specific setup. So that's what I'm looking at right now on UJ, and I'm going to see how this trade plays out within however long of a time frame it takes. And then GU was beautiful. GU was absolutely beautiful. I caught a 1 to 6. Well, I was up a 1 to 6 and I got stopped out at a 1 to 5. I caught the entire drop. I entered the trade at 7 o'clock because I remember entering it before I went to the gym, like 7 o'clock. And what I saw was price was 4 hour time frame, same exact concept. Price was trading bearish. Price was trading below resistance. I took it off because price is not up there and I don't need it no more. But the same exact concept. Time and time and time again, price could not close above this area. And price, this was the candlestick right here that showed me that this was that overlap. So this is where I was looking. Once this candle closed, I entered within this 4 hour candle closing. Price broke below 1, 2, 3. It could not close below. And price finally closed below, came back up, created the lower high. Let me go to the 5 minute time frame because that's what I entered on. Price came back up, and I entered once price came up because at this point in time price was low. Boom, it created this lower low. So at this point in time, it broke structure back down to the downside. So the 5 minute was aligning with the lower time frame. And once price gave me this candlestick, I entered in this bearish candlestick, and I had my stop loss like right above the highs. Price was close to stopping me out. I didn't want to have my stop loss right here because I knew that would have not been a valid stop loss. I gave my stop loss some breathing room right above this high, and price was super close to stopping me out. And I remember when I was documenting the trade, I remember saying that. I remember saying that price can potentially come back up even more, especially since I'm entering pre-session, like pre-London hours. Price could easily come up wick and then continue to keep going down. And even after that, price still wicked above and still closed below this area. And then after that, it was just free falling. Price just kept on dropping. I didn't. The only time where I could have added a position was right here when price did the same exact thing, same exact concept on the 1 hour time frame. When price broke below here, broke below this area, it gave me a break. It closed below here. Price pulled back up on the 5 minute time frame, and it retested. For me, the entry would have been this can. Where is it at? For price candlestick close right here. This candlestick right here would have been the entry, either this one or this one. This would have been the entry. Stops would have been moved to above the resistance range. The reason why I didn't take it, because this was 11 o'clock. I was at the gym. I was still at the gym working out at this point in time, and I wasn't even looking at my phone. So the next setups, no, there was no other opportunity for me to scale in because I was waiting for the same exact thing here. This candle closed below for price to pull back up, retest it, and hold as a resistance, and I'll look for sells. That did not happen. Then price came down, and I was looking for the same thing here for price to break, retest, and continue to keep going bearish, and did not happen. So I couldn't scale in. All I was doing was just moving my R multiple, moving my stop loss along with my R multiple. And then price ended up hitting my main TP that I was looking at. It actually went past that TP eventually, but this was my main TP that I was looking at. Price came all the way down to a 1 to 6. I was up a 1 to 6, not a 1 to 7, but I was up a 1 to 6, and I moved my stop loss to 1 to 5 or multiple, and ended up getting stopped out right here. This is the candlestick that stopped me out because at this point in time I was up a 1 to 6 when price reached this low, and then I moved my stop loss to a 1 to 5, which is right above this wick right there, and then price stopped me out in this candle, and it came down a little bit lower, but that's irrelevant to me. I was able to secure that 1 to 5 on GU, and now I can look to flow with UJ and see what the market does here. I want to wait for confirmation. There's still 30 minutes left until this 1 hour candle closes. I don't want to just try to jump in and enter right now, right this second, I can see a potential um domain expansion right now. Just looking at the 1 hour time frame because price was in this range, it was coming to the lows, rejecting the lows, and then rejecting the highs. And price came, created this high, didn't come back down here, created this higher low. So this could be that domain expansion for price to potentially break out. And it did come down and create a higher low here. But I want to be patient because within the next 39 minutes, this candle could close below here. And if it closes below here, if I would have entered the trade, that would have made that an invalid setup because this could be a double top and price could continue to keep coming down. So I have to wait and see how this 1 hour candle closes. I can't make another decision until it does so. But since price did come up to the highs and I was basically up like kind of not a full 1 to 2, but price is close to 1 to 2. So I'm no longer going to have a risk on the table. So I'm going to grab my phone and move my stop loss to break even on this trade being basically close to up a 1 to 2. I'm not up a full 1 to 2 yet. Let me make sure. Let me check trading. Let me not trading. Let me trade. Okay. Let me see. Hmm. Wait a minute. Interesting. Hold on. Interesting. And gold last night was, yeah, yeah. Gold was, yeah, gold was gold. A normal, a normal day in the life of gold. 1 second. Let me sign into this real quick. Okay, now it's good. We good money. Good money, good money. Perfect. Let me see. Take that off. All right, we good now. Yeah, I still don't know. You know what? Let me see if I can actually change this. Let me see. Let me add one. Over here. And adjust this to right there. That makes it a little bit better for now. Should be good. All right, cool. Let me pull up the chat. Did you catch the sales on gold? I did not. I did not. I seen them and I analyzed it, but I did not. I did not catch the sales on gold. Did you catch them? Cause I was looking at, cause you see I got my tool up here. I looked at it and see where the missed opportunity would have been for me. This would have been the sell right there. I remember I seen it. I remember I seen this. I think I was in GU at the time. I think I was already in the position in the trade, but I looked at gold and I said, yo, a tweezer top at an area of resistance after an overlap. After this 1 hour, I was looking at the same exact, what was it right here? Same exact concept. See how price didn't close below and it actually closed below. Look what happened. Retest and continue to keep going down. I was not able to catch this sell, but this move played out. Price came all the way back down into the next 4 hour support. That is a whole lot of pips. That is, take a guess. How many pips is this? How many pips is, let me see if you all remember. We're gonna do the exact number. From 5260 down into 5100. How many pips is that? You all take a guess. Let me know. But not even guess. You guys should know this. It's not even guessing. You guys know the answer. 5260 down to 5100. Teresa's right. Add an extra zero. Add an extra zero to that, Kristen. 1600 pips. Because remember, if you are looking at it, just add a extra zero to it. Because from 100 to 162, that's 162. Well, basically 162. But 160, you add a zero to the end, 1.6. 1600 pips in a matter of how many minutes? In a matter of, as you can see right here, 1600, 35 minutes. What happened on gold for gold to drop the way it did? Absolutely nothing. This is normal. Absolutely nothing happened on gold for it to drop the way that it did. This is all normal. The rally, that rally, but the move that happened last night, that was off of the war, or the bombs, whatever they got going on over there. That was off the anticipation and the reaction of it, because when the every time news happen, if anything happens over the weekend, that is going to reflect immediately when the market opens. You'll see that reflect in indices as well, but you'll see more of a reflection when the actual market open for indices at 9:30. Like if we look at when did the market open? Where is it at? Yesterday. Sunday. Yeah. Like if you look at the market here, when the market opened on, was this Nas? Here, when the market opened here, it had a decent reaction. Like it had a reaction, and then it just came back up and did its thing, and then did whatever. But let me see. It should have had the bigger reaction. That, yeah, and then Monday, this is when that reaction happened. Here, gold. People were already flocking to gold immediately when that news event happened, right? Well, when everything happened, so gold immediately gapped up. But understanding that even with the drop that happened, that's why you guys, and when we learn and when we build our systems, that's why you guys said that you all, with your systems, you love to be able to trade both ways. That's how my system is as well. So with gold, having your systems in place where you can trade both ways, it's so beneficial, because gold just dropped 1600 pips. If you clear as day see sales happening, are you really gonna miss out on 1600 pips? You don't need to be in the market that long to get a decent amount of pips on gold. You can be in the market however long you want to, but I know Teresa is very, very good at it. She does a lot with buys and sells being able to flow both ways in the market. I don't know if you caught, I don't know if any of you all caught any of the move that happened on gold uh between these 2 days. I was able to catch a piece of it. I caught the, was it the initial, it wasn't the initial one. It was here when price created this tweezer bottom. I caught this move a little bit of this move up, and then I took a couple losses because I went long again right here because price was holding the support. I took this loss. I remember taking this loss right here because price was doing. I did the same exact concept. This time it just didn't play out. Price was rejecting this area, holding at support, and then I seen this variation happen on the lower time frame. Where was it? The 5 minute time frame. I seen price give me. It came down, started rejecting. Boom. Then price started holding as support here, and I decided to enter here in this area, and then of course the first TP would have been high, but I was targeting a little bit higher actually to the next previous high, which was up here. This is where my targets were for gold in that position, and it just didn't happen. The price came down and just completely stopped me out. I think after this I was done trading gold for a little bit, and I ended up getting back in again a little bit for a little bit of this move as well. I didn't catch the whole thing all the way up, but this drop, beautiful, absolutely beautiful. I caught a piece as well, beautiful. I was asleep last night, unfortunately. Man, that's why I set them alerts. Set them alerts. That's all I would say. Just set the alerts, because that's all I literally did ever since I was up. I'll sleep after, because after I'm done, like after the market does its thing, I'm done trading for the rest of the day. Because I've been trading 7 p.m. and I still haven't went to sleep yet. So whenever I'm done trading for the day, then I will just call. I'm not even sleepy. I'm not even tired, honestly. Whenever I do get tired, I'll go to sleep. But yeah, trading these pairs and trading these two pairs, one thing I've observed and noticed how following my system, how easy and simple it is for me, because when I base my system not on emotions and I base my system on technicals in the system, it's so simple because even though GU took well, I normally trade gold and I'm used to trading gold and I get 500 pips, 700 pips, 800 pips, you know, every single day that I would catch a actual decent move. I caught 100 pips on GU in a matter of what 8 hours, and to me it's not relevant. I don't care about how many pips I care about the R multiple, because obviously with GU I can use bigger. I only had a 20 pip stop loss, or in GU, or not only, but 20 is actually a pretty decent size stop loss. But I had a 20 pip stop loss on GU. I can use bigger lot sizes than I would on gold if I'm having a 70 pip, 60 pip, 50 pip, 80 pip stop loss on gold. So having to hold the trade is irrelevant to me. If you made, because I look at it from this aspect, right? If you made big numbers, I always use big numbers because I have a abundance mindset. That's why I use big numbers. I don't like to use small numbers because I don't like to put myself in a cap of a category. I always, no matter what, even if the number sounds, to me, it doesn't sound unrealistic. There's no number that I can say out loud that doesn't sound unrealistic to think that I can never achieve that. And I can achieve any single number that I would want to achieve that I put my mind to. But if you were to make uh $50,000, does it matter if you made $50,000 in 8 minutes or 8 hours? You still made $50,000. As long if most people make $50,000 a year. That's like the average, right? 50K, 50K a year on average a year. You can make you can hold a trade for a month just to make that 50K. You can hold it for 2, 3, 4 months. You still made 50K. It didn't matter if you made 50K, and I was still for example, this right here was still a 1 to 5 R multiple. 1 to 5 on GU is a 1 to 5 on gold. It's a 1 to 5 on Nas. It's a 1 to 5 on Bitcoin. It's a 1 to 5 on Tesla, silver. It don't matter what the pair is. A 1 to 5 is a 1 to 5. The only difference is that some pairs move a little bit slower and some pairs move faster. As simple as that. I know GU does not move like gold, so I don't expect a 100 pip move on GU in 2 seconds. I do know GU moves very smoothly, and GU moves very well with structure. Whenever it's trending, whenever GU is consolidating, terrible for me personally and my system. Even though I still can trade it, I would rather trade gold in a consolidating period than trade GU. If GU and gold were both consolidating, I'm not touching GU and I'm trading gold because my system can trade consolidating. But if GU is ranging, if any one of my pairs are ranging, I'm just not gonna trade it unless all the pairs that I'm looking at are ranging. Then I will just stay away from the pair that's ranging. That's how I have it with my system because I have multiple pairs that I can look at different times. The only pairs that I trade really are gold, GU, UJ, Nas, SPX. Not so much because I like Nas more than SPX, and I don't really trade silver because I trade gold, and I haven't really looked at both of those two at the same exact time. And the only difference really thing is for me with silver is just the spreads on my broker. I've never, out of all the times that I've traded silver on different brokers, I tried to trade it. It's just something about that gap, like that spread on silver is just different. It's like that on every broker for me. I don't know if there's a specific broker that it does work on. I personally don't care because I can trade gold and the spreads on gold is just absolutely beautiful. But this dotted line right here is where price would be. Say I was getting in for let's say I was getting in for sales, right? If I got in for sales on silver, my broker would have me like all the way down here. Price would have to come all the way down here just for me to be at break even. So personally, as over the long run, I've noticed and looked at it like I would be giving back 2 to 3, 4, like two to four, depending on how big of a spread it is. Like 2 to 4 are multiple, and that racks up over the days, especially if I'm trading multiple times throughout the day. I'm scaling in. Let's say I take 10 trades. That's an extra 20 R that I'm giving back just from spread, not the just from actual spread alone. That's a 20 R multiple. I would rather trade a pair where I get clean spreads, where I get the full R multiple that I want to get. I don't want to plan a 1 to 4 R multiple and then price gets to there. I only make a 1 to 2 based on the spread. So I'd rather just not trade silver and just trade gold, GU, UJ, Nas for the most part, and that's really it. Those are the only 4 pairs that I really need. Eventually, more times than not, at least one of the pairs is trending for me. It's rare that all pairs are ranging. If I have all these like 4 pairs that I'm looking at, Nas, I have not traded Nas in so long. I've not traded indices in a long time. I don't think I've traded indices all year. If I don't know if I remember or not, but I don't think I touched indices all year. Price has been trading sideways ever since last year. Price has been trading in this range since what is this? October. That's a lot of months. If I was only trading Nas, I would have been able to trade this, but that's a lot. I need Nas to actually do something for me to want to actually really start looking to trade it. Whether that's break below the lows, break below the support, or break above the. All right, this right here isn't a key area. It's just the highs because price isn't holding at support yet. This is just the highs, but I will want to see price actually close above the highs. And this is that idea, that concept of what a breaker structure looks like versus what a fake out looks like. That's why personally I look at it from the bodies and I classify it as that. I look at the wicks as like liquidity. That's where price came up to, but the candle actually closed here. The body actually closed here. This body closed above and the very next candle closed right back below. And price just dropped all the way down. So Nas is irrelevant to me at this point in time. But when Nas breaks out of this consolidation, Whichever way that it breaks out, I will be trading it. Absolutely. Whichever, if Nas has been in a range since October, it is, yo, it's already March. It is March right now. That's a lot of months. I'm not going to count the months off the top of my head. Once Nas breaks out of this consolidation, I don't care if it goes bullish or bearish. I'm going to trade that direction of wherever it breaks out. That is a whole lot of pips. If price breaks below, I'll be looking to trade down into this area, which lines up perfectly with this previous area of resistance. And if price breaks above, I would look to clone this and look to trade up into 24, 28. We'll just call it 28 flat. 28 flats for that. Those are the two areas that I'll look at for Nas. So all I'm going to do is I'm just going to set an alert down here at the low of Nas, and I'll set an alert up here, and I won't touch Nas for the rest of the year if I don't have to, however long it takes, until Nas hits one of these alerts. Not going to trade it. SPX is the same way. This is irrelevant. I don't even need this on my watch list. That's not even my watch list. That's the study sessions. So for now, these three are the main pairs that I'm going to be watching and looking at. And I'm going to keep on monitoring UJ and see how price closes in the next 17 minutes. Price closes above, I will look for a break and retest. Have you traded GA this year? That's actually a very good question. I don't know if I traded it. This year is going by so fast. It's ridiculous. It's already March. We're already the third month in. I did trade GA. I don't know if I traded this year or late last year. Let me check. Let me look at it and see. Do I have it in my watch list? No, let me look at it. But GA has been beautiful. GA actually I did trade GA. No, I didn't. Because every time I was looking to take a setup on GA, gold always looked cleaner. It was always a better looking pair. But GA has been trading bearish all year. GA has been looking absolutely beautiful. I did take it. I remember I did trade at GA. I traded GA. I can't remember off the top. It was. I remember. Let me see if this was this year. Because I remember it was near these lows. Because I think this was when Teresa used to look at GA. It wasn't. It was a little bit. It was right. I remember trading it over here. Yeah, that was the beginning of the year. So this is when I traded it. I remember catching. I do remember this. I traded GA from. It was up here, like somewhere in this area down into the lows, and then after that, I just stopped trading GA and just started trading gold. GA is very, 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 very beautiful. I don't know what is going on between the pound and the Aussie for the Aussie to be that much stronger than the pound right now, for GA to just be constantly dropping the way that it is. But this is one of those pairs. If you just traded GA, you'd be good on GA. Do you trade GA as well, Kristen? You see something. Sometimes. Okay, okay. Let me see. Like to UJ. Let me know if you guys have any questions that you would have for me so far today. 15 minutes. This would be very interesting. Once I enter this trade, I'll just set some alerts and not go to the gym because I just went to the gym. I was at the gym like 9 hours ago. So I'm not going to the gym right this second. I really don't. Can you break down gold? Of course I can break down gold. Of course I can break down gold. How do you want me to break it down? Do you want me to break it down? How do you want me to break it down? What do you want me to break down on gold? Do you just want me to break down, just do a top-down analysis of it, or is there certain things that you are trying to understand about gold that you may have a little structure? Okay, perfect, perfect, perfect. Yeah, I got you. I got you. Let's look at it. Let's look at it. So this is one thing for full, so full top down. Got you. So before I break that down, I gotta explain my updated how I look at the markets and how I flow now. I literally can't give any more. I can give all the praises. I got to give all the praises to God and the Most High because He has been just downloading so much for me and just downloading so many things like in my mind. It's just things were just clicking. Like I would have so many things, like even dreams, but it'd be so many things that just start clicking. I would just be sitting down and I would just be looking and some things are just popping in my mind. I just get to writing. Like my journal is full. It was some things. It's actually on the other side, but this is what I wrote down. Right, so this is how I wanted to update things. So when I sat down with myself, I said, how can I make this even more simpler? I've already gotten to the point where I removed the 30-minute time frame, so I was no longer using that. And I sat down with myself. I said, okay, let's examine this. And when I tell you every single thing, every single decision that I made, it just came to my mind to the point where it was no confusion. I didn't have to second guess any single decision that I made because once I seen the difference and I seen how clarity came from that decision, I immediately made the decision. But so I removed the 15-minute time frame. I no longer look at the 15-minute time frame at all. I don't even have it on my thing no more. It's just the 4 hour, 1 hour, 5 minute are my time frames that I keep up here. That doesn't mean that I'm not gonna look at the daily or not look at the 1 minute. I'll talk about that in a second. But the 4 hour time frame, it is the regular normally what it does. It's the structure, the key areas, and the trend, like the trend, the structures, and key areas, right? The 1 hour time frame is the same exact thing. The 4 hour, 1 hour, nothing changed about them. 5 minute, nothing changed about the 5 minute as well. They all stayed the same. The one thing that I've adjusted, two things. For one, 15 minutes is irrelevant to me because I rarely take trades on the 15-minute time frame. And this is how like I always say, with my system now, I've already, and you guys understand this when you're building your systems. You do not have to keep doing the same things that you've done years ago or months ago that you're doing now. The same things that I'm doing now, I should not be doing the same thing with the way that I document, the way that I track my trades and doing all of this. I should not be doing the same thing now that I did 3, 4 years ago. 3, 4 years ago, a couple of years ago, I had to document the win rate of doing a specific like when I was building out my playbooks. I had to document how often, the break and retest setups work. How often, how many times, what's the risk to reward? I had to document that. I'm not about to have a setup and it doesn't work. So if I was seeing out of all the times, that's why I don't take breakouts a lot anymore. But I was analyzing and see out of all the time, okay, break and retest, it plays out more times than not. Not only does it play out more times than not, that risk to reward is great because that's what I wanted to focus on. That's what I care about. So now I have my systems. I know the break and retest setups work. It don't matter what pair it is, it don't matter what time of the day it is. I know break and retest setups work. I know all of the setups that I have work. I know my system works itself. I am not going to document the same way that I did before. And the reason why I say that with the 15-minute time frame, I don't need to go back and analyze the last 50 trades that I took to know that out of those 50 trades that I took, Probably one of those was on the 15-minute time frame. I know that because I'm always on the 5 minute and 1 minute, and I know when I enter on the 15-minute time frame. I don't need to go back and get data for that. That's just common sense to me. So if I'm not going to use it, why would I have it on my chart in the first place? So I decided to remove the 15-minute. The 1 minute time frame. This is another key thing that I did with the 1 minute. The only time that I would enter on the 1 minute if the market is doing something like it's doing right now. That's the only time that I would enter on the 1 minute. When the 1 minute is like the market is moving aggressively, like how UJ was moving aggressive at that point in time. But when the market is moving aggressive and it's a lot of momentum in the market, that's when I use the 1 minute time frame because I'm gonna miss a lot of the setups on the 5 minute time frame, and I've observed that especially when you trade gold, when you trade Nas. So that's the only time. Like if there's news that comes out, market open, if it's high volatile things that's happening, these type of conditions, I would use the 1 minute time frame. This I'm only using a 5 minute time frame. Like this type of condition right here, when the market is shooting up, I was on a 1 minute time frame. If the market is actually just trending and moving regular, I'm using the 5 minute. If it's just dropping aggressively like this, I'll use the 1 minute. So that's what I determined with the 1 minute time frame. And then the daily time frame, I don't look at the daily time frame no more. The only time I'll look at the daily really is at the end of the week, or the beginning of the week, or if I'm analyzing a pair for the first time. If I've already analyzed the pair, I'm not going to the daily time frame. There's no point in me even looking at that because daily setups take so long to play out, and I already know gold. I know I don't even have to go up on the 4 hour time frame. Like knowing that price was up here, I know that 5500 is the highs for gold. Basically, I know it's 56, but 5500, I know that's the highs for gold. And I know that the lows are all the way down here at 4500. This 10,000 pip range. This is not 1,000 pips. This is 10,000 pips. This 10,000 pip range from 5,500 to 4,500. This huge pip range. I already know that this is that major swing high and this is that major swing low. Me going on a daily time frame is irrelevant. So that's I wanted to add that because before I do the breakdown, you got to understand why I'm not on certain time frames, why I'm not doing certain things as well. And then when it comes to my journal, the way that I journal now is very simple. I just look at the setup that I took. Like what was the setup that I took? Like was it the break and retest? Was it the domain expansion? Was it the bounce play? Which setup it was? Because that has to I have to know the setup that I took. Because if I don't have a setup, then that means that that didn't follow the system. That's the only reason why I document to see what the setup was. It's not to see what the win rate is for the setups. It's to see that I actually follow the system. So if I can actually identify and say, yep, this was a break and retest, I followed the system. As simple as that. My risk to award, of course, because I have to have a minimum of a 2R. Any mistakes that I made and did I follow my system? But with all that being said, I can close that. So that is what I currently look at now. So if I'm going to break down gold, all I'm going to simply do, let's break it down because I know you want to understand structure a little bit more because you may be a little bit confused with structure. Especially looking at this, especially looking at what's going on now, I can definitely understand and see how that could be the case. So when I'm looking at gold now, when I look at what is happening now in this current state and time, gold is trading downwards, clearly trading downwards. So I know that on the 1 hour time frame, price is going to be trading bearish. So I know that when I go down to 5 minute time frame, if the 5 minute is aligned with the 1 hour, then I'll take sells. As simple as that. Now I'm going to mark off the key support resistance areas. One is going to be right here because price actually held as support and resistance. I like to keep it consistent, especially with the bodies. Price held as resistance, held as support. Then I'm going to look, and since price is trading below here, I'm going to look and see, is there another area where price held as support and resistance? It did right here. Because price held as resistance, it gapped here a little bit, but it held as support, held as support, held as support, held as support, held as support. So right now, these are the two areas, and if price does decide to break up, back up there is an area that I would be able to identify right here, because price did hold its support here, and then it held its resistance here, and then it held it a little bit support right here as well. It came down, held a support. So these are the only three zones that I'll be looking at on gold, and the same exact concept applies. I'm gonna adjust this a little bit since this is this previous area. If this 4-hour candle closes below here, I would look for sells down into the next 4-hour area of support. There's still 3 hours left in this candle. The same exact concept. If price closes back above here, that's not a break of structure of this. This is just a wick that formed. I wouldn't classify if price, now if price closes, that's a break of structure. And I can clearly see that that happened at a 1 hour time frame. But if within the next 3 hours price stays below here, that confirms that that's that break. And then if price pulls back up and then overlaps this area, price could potentially go back above. But looking at structure, if we're just looking at simple higher highs, swing lows, major higher low here, huge rally up, retracement. Simple as that. This right here, price was ranging, it was trading sideways. If you wanted to, you can classify it as a higher low as well. But this is just a big leg up. If you go to, and this is how, if you don't know, I already know, and I'm doing this to help you so you can kind of get a better viewpoint of it. If you go to the daily time frame, doesn't the higher lows look a little bit more cleaner on the daily time frame? You see this that we would have saw on the 4-hour time frame, Leah? Like that consolidation, which you may think, okay, this is a higher low on that 4-hour time frame. Yes, but if you go to the daily time frame, doesn't this just look like one big move up and now price is retracing and this is the higher low down here? Price had a big leg up. That happens a lot with gold. Price will have a big leg up, big retracement, consolidate, shoot up. So many times. Big leg up, big retrace, well, not a big retracement, but a decent retracement. Consolidate, shoot up. Boom. It is more clear. Perfect, perfect, perfect. So if you ever get confused, if you ever don't have clarity, ask yourself, implement this like with your system. Ask yourself, how can I get clarity? What do I need to do to get clarity? If I can't have clarity on the 4-hour time frame, how can I gain clarity? Okay, I could just go to the daily time frame. And if you can't get clarity on the daily time frame, go to the weekly time frame. It's as simple as that. Go to the weekly time frame. If you can't get a clarity on any time frames, you can either do one of two things, depending on your system. You can either go up a higher time frame or learn how to see clarity on that time frame, specific time frame. If you don't understand the clarity, because I can see it, I understand it, and if you don't understand it, you can do one of two things. If for your system you would rather just bump it up a time frame, or you can do both if you want to, but for your system, if you want to bump it up a time frame just to see, okay, this is the actual higher low. So when I go down to the lower time frames, I know that price is breaking this internal structure, but I know that the overall trend is still bullish. You can do that. If not, then learn how to read the candlesticks, learn how to read market structure on that specific time frame that you don't have clarity on. It could be the 4-hour, 1 hour, 5 minute, 15 minute, 30 minute, 2 hour, no matter whatever time frame you use. So when it comes to gold, I have all of this marked off. I know that the market is currently trading bearish. So if I'm looking at gold, I would be looking for sells at this point in time. This right here, boom, you see that this was the previous low that formed. That's not that. That formed right here. Price closed below, way too much momentum. It's a high probability chance that price is not coming back up here. So now I just got to look left and see, is there another minor area of support and resistance where I could look to, if price continues to keep going down, take sells. And there is one right here. Boom, let me drag this over some here, clean it up right here. This is actually, look at how this 1 hour, you cannot make this up, bro. Look at how this 1 hour candle closed. You cannot make this up. I literally just drew this candle here. This candle just closed. And this 1 hour candle closed beautifully directly above this area of support and resistance. You can't make this up. That's why it's so important to actually wait for the closures. And when you do yours, once again, everybody does theirs the same. But for me, I've seen the most consistency wherein I draw my support resistance at the bodies. And I use the wick as like liquidities. Because what can easily happen a lot of times is those liquidity grabs. For example, right here, this right here was that liquidity grab. And liquidity grab is very simple. It's just price comes up to the highs and it just goes opposite way. Liquidity grab in the terms that I talk to you guys is just an overlap. That's all a liquidity grab is. You can call it a liquidity grab, you can call it an overlap. That's all it simply is. You will have that high, price will come up and match it or break above it a little bit and then come right back below and start trading below it. Boom, price at this high, it came up, it matched it a little bit, and it came back down. It's all it is just the overlap. As simple as that. As simple as that. So with gold, right now, what I would wait for is one of two things. For either price to pull back into one of these two zones, either this area here, because this was the previous support right here, and put for price to pull back into support and successfully hold as support, and I will look to take sales here. Or if price breaks above, I'll wait to see if price does pull back up into here, and I'll look to take sales back down into there. Or if price decides to break back below here, I'll wait for that break, retest, and look to take shorts. And for the shorts, I would target a 1 hour zone in between because this is a long way towards that 4 hour zone if price actually gets there. Is there another area? There is right here. Yeah, right here. Right here will be the next zone below. And that is it. That is the top-down analysis on gold. That is how I am going to trade gold whenever that setup does present itself. Did this give you a little bit more clarity? And if you do have specific questions about market structure, definitely let me know. Look at this. You can't make it up. You cannot make it up. You cannot make it up. Oh, go ahead. I forgot to add you. You can go ahead and speak.
All right, shalom, shalom. Uh, Sierra, so I had a question. So
Mm-hmm.
when you broke it down, you stopped at the 1 hour, so you won't do anything until it gets to that 1 hour zone prior to entry.
You said what?
So when you broke it down, you pretty much stopped at the 1 hour zone.
Mm-hmm.
So don't try to enter until it gets to your point of interest on the 1 hour.
Yeah, correct, correct.
Yeah, because I've been trying to enter on like a 5 minute and ooh,
If
I get
you
slapped.
if you want to,
But
we can do that. I can help you do that. You would do the same exact concept. Like you see how I'm because on the 1 hour I have a higher probability of winning. If price pulls back into this 1 hour zone and rejects it, it has a higher probability of coming down. But if you want to do that on a 5 minute time frame, let me go to the study session.
mhm.
Let me show you what you would do. Because you could do the exact same thing. If you want to apply that concept and scale in and be able to catch these scale ins, you would do the same exact thing here. So let's say, for example, let's start at the top and let's see and let's work our way down. So we had the previous one right here. Boom. You can see, and this is how you know like if you should get in or shouldn't get in. You can see price came down here, it closed below, then it came back up, then it closed back below. This was that overlap of here. This could have been an entry. You got the same exact concept right here. Boom. Price came down here. It didn't reject it. It didn't close below, came back up. It actually closed back below here. If you've seen something on a 1 minute time frame, you could have entered here, or you could have just entered off of this candlestick because price already overlapped it. It already came down and rejected it, and it came back up and closed again. Could have entered here. Same exact concept. At every single, this works in any single market condition, but especially when the market is trending. Price came down. This right here, it was just too aggressive. And this is what I mean by 1 minute time frames. When the market is moving like this, if you want to be able to catch these moves, you got to know how to trade on the 1 minute time frame, because you see big candlesticks on the 5 minute time frame. But if I were to mark off all of these areas where these lows formed, and we go to the 1 minute time frame, you will see entries for those 1 minute time frames on each one of these zones. Let me go up, and let me go up here. Boom. Looking at this one, look at this. Price came down here, gave a shooting star right here, and it closed below. The same exact concept. Let's break it down. I'm going to show you how this actually works. Look at how simple this is. If we take this off for a second, look at the same exact concept on this 1 minute time frame. What happened? Price closed below. Look what happened. Price came back up, retested it, and it continued to keep dropping down. If we looked at it from the same aspect here, this was the low right here. This was the low. Boom. Let's go over. Look what happened here. Price came down, closed below, came back above, didn't hold, and look what happened. It closed. If we adjust this to this low right here, look what happened. It closed below, pulled back up into this area, rejected it, and then we had this huge drop that happened here. If we go over and look at the same exact concept at this low, you could do it at whichever low, but if we're just looking at the 1 minute time frame to show how you can catch these moves as they're playing out. Look at this. Boom, rejected, close below the body. Boom, continue to keep dropping. Same exact thing right here. Look what happened. Price closed below the low. Look what it did. Rejected this area to the T with this wick and kept on going down. And even right here at this point in time, price already broke below here, but price rejected this area, came all the way back up, did the whole retracement thing and all that, and then where price is at now, look at it, did the same exact thing here, closed below, came up, retested a little bit with this wick, came down. Even look what the market is doing now. Look what the market is doing now. Rejection. It is holding as resistance here. If price continues to maintain and hold as resistance, price could potentially come down to the low. And this is 1 minute time frame. And with the 1 minute, especially with this move that happened, one thing I've learned is not to assume that the trend is going to ever stop, but also understand how much the market just already moved and understand where you're getting in at. If a big significant move happened and the market starts consolidating a little bit, price can either consolidate a little bit and keep going down. But if the market makes a big move and it immediately has a retracement, that's where you can start looking to scale in. But if market makes a big move and it stays there for a while and it starts consolidating, more times than not, price is going to have a significant retracement. And if you can look at it, look what happened here. We had this big drop here. What happened? It started consolidating a little bit. Then it shot up, came down. It's consolidating a little bit. Taking sells is still valid because price is trading at this area, but you just got to understand, if you lose, where are your lower high points? What would invalidate the whole sells for you? Because if we're just looking at going back to the 5 minute time frame and taking this off, and we just mark this off, you can do it on every single time frame. That's why I want to show it to you on all the time frames. If we're just looking at the 5 minute time frame, look what happened. We got the close below, and if price were to pull back up into this area and reject this and hold as resistance, this is how you can use the 5 minute time frame to take a sell to look for shorts back down into the support. Same exact concept where price is currently trading at, depending on how this forms. This will be the low. If price closes below here, you'll wait for price to actually close below. And if there's momentum, if the momentum is continuing, you'll wait for that retest, that rejection, and then look to continue to keep flowing down. Does that make sense? It's amazing how clear it becomes. Thank you. I
It
appreciate
truly does, Sierra, and I appreciate it. I'm gonna have to watch this video over and over again. But
it.
yes.
Of course, of course. Let me see. UJ stopped me at that break even. The way that played out on UJ was absolutely beautiful. Absolutely beautiful. Price, once again, this is why I just stop. Once I started implementing this body, this gave me so much clarity, man. Once I started implementing, like focusing on picking one and being consistent with it instead of doing the uh body weight and trying to determine which I want to use and be consistent, because the more that I'm consistent with something, the more data that I have with it. When I'm trying to do multiple things at one time, if I'm trying to calculate drawing areas and drawing support resistance and drawing market structure on the wicks and at the bodies at the same time while trading live, that's pointless to me, because that's going to take so many trades. It's going to do, I would have to take like 100 trades, right? And that means I have to take 100 trades of each setup to see which one is better, because I got to actually see, does it work? Because I know they both would work depending on how you do it. Because if I were to just draw them on the wicks, I could make it work. But I've noticed that when I've just focused on the body and just be consistent with it, I see repetitive patterns a lot more often, and I'm able to catch on to these things and catch on to these moves so much faster. It's like when I just look at the markets, they just look so clear. Like looking at UJ right now. But first, before I break this down, I do got to do my journal. I just do it out loud in my head. But uh stopped out at break even, so I followed the trade management system. I was almost up a 1 to 2, and price came down. I closed the trade at break even, and I closed the trade. I actually pressed close on the trade. I didn't need to put a stop loss. I seen price got to my break even point, and I closed the trade. So with that being the case, I'm proud of myself, because I followed the system and not the emotions, because I could have easily looked at it, let it fluctuate, and say, "Oh, I'm gonna still hold it." That's not what I said beforehand. I said beforehand that if price comes back down to break even, I'm getting out the trade. That played out beautifully. The entry was beautiful. The exit was beautiful. The trade management was beautiful. Me not scaling into the position again was beautiful. And look at the same exact concept. What happened? Price wicked above, and what I said I was gonna wait for. The close above and then the close below. Literally, when we was looking at this candle, we was looking at this at like 950, and within a matter of 10 minutes, this candle closed all the way below here. Imagine if I tried to, this could be another thing that could help you all, but especially Leah, because I can understand how you could try to flow, and every time you try to get in, like you just get stopped out, even though you may be entering at a lower high, and you get in and you see structure break in X, Y, and Z. Time frame correlation. That's the biggest thing. That is one thing that truly helps and understand. Like you got to understand each time frames, understand what the time frames are doing. Like if I'm looking at gold, let's look at gold. Boom. Look what it, didn't we marked off with the zone? Was it on this chart or was it on another chart? I think it was this chart. Yeah, I think it was this chart. Yeah, either way for price to pull back up in here, and then we had the 1 minute zone, the 1 minute low right here. Yeah, look what happened. Price held as resistance. If you were to take entries, entry would have been right here. Stops would have been above the resistance, and then you would have looked to target down into the lows or whatever your R multiple is or whatever your next area. If you would have entered this trade, this would have been valid. Look what happened. Price moved away from that area of support, and it came down into the next area. This was the low. Price closed below the low, came back up and retested. Understand that when the market is moving aggressively like this, you can't expect the market to come back up and retest an area every single time. A lot of times, this is what happens. You got to enter on this. You got to enter on this candlestick. You can't always wait for price to break and retest. When the market is trading regular, yes, of course, you got to wait for the break and retest on the 5 minute or the 1 minute, whichever time frame you use. But I've observed for me, when the market is trading aggressively, how many times did we get an actual full break and retest at any of these levels? That when price was just dropping aggressively, like so far today, we didn't get a break and retest here. Price gave the Maribozu off to the races. We didn't get a. Did we get a break and retest here? Yeah, it was a break and retest here because price broke below, retested here on the 1 minute, even retested here. We got that break and retest here. When price broke below here, broke, retested, it did retest and overlap, came down here. This is, oh, this is 6 o'clock. This is already 6 o'clock in the morning. This is the whole move that happened. That is insane. Right here. Did we get a break and retest here? Nope. Momentum. Price just kept on shooting down. So when those things happen, you got to be able to get into the position. Get into the position. Let me see. Boom. Let's see what happens on gold. There's 38 seconds left here. I want to see what happens here. I'm gonna monitor this. Patience, patience. Two areas. This low and this low. These two lows. Looking to see if price respects one of these two. Price starts to break back above this area support, sales are no longer valid. For me, right this second. If price closes back below this support, I'm entering. You cannot make this up, man. This support and resistance stuff, you can't make this up. You cannot make this up. Look at how price came back and retested these levels so beautifully. You can't make this up. This is what the market looks like. This is what clarity looks like in the market. You can't make it up. You cannot make this up. This is what clarity looks like in the market. It does the same exact things over and over and over again. If I go even deeper, let me take all of this off. I don't need no Jones on my chart right now. Look what we got on the 5-minute time frame. This was the support right here. Price closed below. It came back. It didn't retest and hold as support. So price could, because what is it doing now? Consolidating. What did I say? The price does that and consolidates for a decent amount. What could potentially happen is that retracement phase starts to happen. That's why I've noticed and observed that a lot of times for me, what my issue was, I would come to the market right here and I'm trying to just see the quickest lower high that happens and for me to get in, when just doing that but not understanding and looking at the understanding of higher time frames and understanding where price is trading at in the key areas that it is trading near and trading at, and what price has to do in the long run. But look where price rejected. This is the major zone right here. I'm actually going to put it on the body. But look what we have here. Price broke below. Personally, I just like to do, I really like to focus more on the 1 hour and 5 hour for like, not 1 hour, 5 hour, 1 hour and 4 hour for more of the longer term setups. But if the market is moving aggressively like how it is, that's the time when I'll use the 5-minute, the 1-minute time frames. So looking at this, clear as day, simple. Few things. Price, this low didn't close, it closed below, came right back above and closed above. If price starts trading below here, I'm going to get in for sales. If price fails to do that, then I would wait and see what the market does, because price could pull back up into this previous lower high point up here and give that break and retest here before looking to go down. And if price starts breaking it back above areas, just keep on waiting. The market is clearly bearish right now, so buys are out of the question for me right now. Buys are not even in the conversation this second. Buys would come in the conversation if this is a overlap. If within the next whole bunch of hours that happen, buys would be the conversation if price, let's say, pulls back up into here and it closes back above and it fails to start trading back below here. That, in that case, I would start looking for buys, because that's an overlap. This wouldn't have been that clear break, because on the 1 hour time frame, we got the candle close and then price breaks back above and it continues to keep trading above. That's if that aspect was relevant. But see what happens here. Price starts trading back below in the 1 minute. I will look for sells. If not, I will continue to keep waiting and monitoring and see what it does. Let me see. There was the highs right here based on this 5-minute time frame. You cannot make this up. Support and resistance is so simple. If you keep your support resistance consistent, whichever way that you want to do it, if you do it on the wicks, do it on the wicks. If you do it on the bodies, do it on the bodies. But have a system in place for it. If you have a system that allows you to do both, where let's say you just draw a box, you just like, that's your system, the whole zone, that's, you just do boxes. Be consistent with whatever that system is that you do. Pick one and just be consistent with it. You will see a lot more progress, a lot more, especially within your system, because you can critique it to align with it. That's the beautiful part about trading and building systems. Because I've observed this from being in the position that I am, where I have been teaching and mentoring a lot of you all and a lot of people over the past few years. I've noticed that everybody has their own system. There's people that I've seen that I would help them build their system, and now they trade the way that they trade, and they use whatever time frames that they're using. They're making six figures plus. They're building their own houses and stuff. People are doing this and they trade gold like this. I know whatchamacallit, Danny. Danny is absolutely amazing now. I was just talking to her the other day, but she's absolutely going crazy on gold and Nas. Before, with the way that she trades, it's different. The way that she trades is different from the way that I trade. We trade different, completely different. But it works for her because she's found something and stuck with it and continued to be consistent with it. And that's all I'm doing. I'm being consistent with what works for me, and you guys get to see that play out. And if I see something that's not consistent, I'm gonna fix it, just like I did earlier. How I showed you guys with the 15 minute, me not using certain time frames no more, and how I look at it. If I see where there's uncertainty, and if I see another option where there's clarity, I'm always going to choose clarity over confusion every single day of the week, no matter what. And the way that I do my support resistance, it brings me clarity and it works for me. So I'm just going to continue to do that. But whichever way you decide to do, just stick with it. Like, keep on, if you keep switching it up, you don't have data to keep switching things up. That's to me, for me to, that's like me. I built all this time building out my system, all this time building out my playbooks. I've been spent all this time, hundreds and hundreds and hundreds of trades, seeing the setups play out. For me to say, you know what? I know that my system works. I know all my setups play out. I know that they win more times than not. I know they got great R multiple. I know this works. I'm gonna put this to the side and I'm gonna learn this completely new thing. I'm gonna start learning how to trade with volume charts and Bollinger Bands and VWAPs and uh, market data and all of that. It doesn't make sense to me to do that. Why would I put away something that works just to try out something else? You do the trying phase when you're going through, when you're trying to learn something. That's when you try out the different strategies, you try out the different pairs, you try out all the different methods, and you see what works best for you. But when you have something that actually works, why are you switching it up? How does that benefit you? You just ask yourself that. What does it benefit you from switching it up? If it benefits you and if it brings you more clarity, by all means. But if you're just switching it up just cause you went on a little losing streak, if you go on a losing, and this is what I've observed with myself and with my system. If I go on a losing streak and I'm automatically switching up the system, I did not backtest that system long enough. Couldn't have been. If I go on a losing streak and I'm automatically maybe the system doesn't work. Maybe I should switch it up. Maybe I should X, Y, and Z. I clearly have not backtested that system more than enough times. Because if a couple of losing trades makes me throw away the whole system, I ain't backtested enough. Okay, let's see what we get on gold. Might be it. Look at how beautiful this is. The market rejected it. If it closes below and it's continue to still maintaining below, sells will be valid. If it closes above, sells are not valid right this second. That's why when you trade this way, and just trade anyway, waiting on the candlesticks to close is so important. And its price is breaking back above. I can't even look at UJ or these other pairs right now. I'm too locked in. I can't even look at these other pairs right now. Well, gold, I can look at another pair now on gold because I still got 5 minutes to wait. UJ, UJ came down back to support and it pulled back up. Perfect. Great. Still followed the system. UJ came down, rejected. Once again, same exact concept. Just looking at UJ when it comes to the trade. Price came down. It was trading bearish at this one time. Lower high, lower low, lower high, lower low. Now it created a higher high. So now all I was just simply wait for in UJ. This, if price does do this, this will be a domain expansion for price to come down and create that higher low. And if price, it doesn't matter where it creates the higher low, but if a price were to come down and create a higher low and don't break below here, that's what a domain expansion would be, because price was in a range, consolidated back and forth, and then it came down, created the higher low. After the breakage structure, price broke structure here. Well, based on the body part right here, price came down here, boom. If price continues to keep going above, this 1 hour candle still got to close anyway, so there's still 27 minutes left. Being this the case, if price does close above, then that's when I can look for that retest, then look to scale in and literally take the exact same trade that I took earlier on UJ, the exact same trade that I took earlier for this buy. Was it, which one did it? I think it was this buy. Was it this buy? What did I enter on UJ? I think it was right here. Yeah, right here. The exact same thing. For price to break above, retest, and then look to go bullish. So I'll wait 27 minutes, see how this candle closes. GU's actually, I don't care about none of these other pairs right now. I just care about gold. Because if gold pulls back up into resistance, and especially this is a 1 hour zone. So if it pulls back up on the 5 minute time frame, rejects and holds as resistance here, I'm going to take sells here and I'm going to look to target back down into the lows first, which would be the lows that formed right there. I'm gonna take all of this off, but the lows first, and then the next key area of support that I had marked off, I ended up taking it off, but I'm gonna put it back up. It was, I'm gonna do right here. I'm gonna do it here. Yeah, price out of support resistance. Keep it clean. Boom. This would be that next area of support. Price maintains, holds the support there. I'll look for sells there. We also have, that's what price rejected before. This is what price is currently trading. Well, this is where the body was. Was there a support? Price is trading near this area right here. This is very, there was support right here. Yeah, there was a support right here. Yeah, price held a support and resistance here in this range. It's a 5 minute. See what happens here. Price closes above here. This zone, this area right here in the next 8 seconds, then price could potentially come back up into this next zone unless there's an overlap, unless this candle closes above and then closes right back below. Looking at this, what I'm going to do is keep it simple. I like to be consistent with my areas, especially with what the market is doing now. That's why I mainly, whenever the market is moving like this, I'm put more emphasis on what's going on over here, because what's happening now is not the same thing that was happening over here. Two different conditions. So I want to focus on what is the current market structure telling me? What are my current lower highs, lower lows? Where are my current points? One would be here. And then on the 1 hour time frame, there'll be another one right here. And then this major one right here as well, based on the 4 hour time frame. Boom, here, support right there. Now I have all of my major key points marked off. Now it's just a matter of waiting for an opportunity to take a trade. This candle's still forming, so I'm gonna wait. I'm gonna let this candle actually close, because within the next 23 minutes, this candle could close below here, and that would be irrelevant to that. So I just want to look at it clean. Market structure. 1 minute time frame. Yeah, prices. Prices respecting this area. This previous area of resistance. See if there any internal right here that I see on gold. The price is respecting and holding. Let me see what it looks like on the 1 minute time frame over here. I actually use my eyes in these areas. Same exact concept here. Price broke above and then it came back below. Now it's breaking above. So price already overlapped it once, and then it's coming and potentially breaking above. What could potentially happen here is, depending on the type of momentum, if price actually does start closing above here, price will close above, create some form of a wick, and then continue to keep pushing up to the upside. This is how you're able to trade both sides. The price came down and rejected here and held as support. You just trade from level to level. That's how you use the 1 minute time frame for precision. The price came and created the higher low for precision, and then the targets will be up into the resistance range. Seeing price already broke above one time. This is clear. This is the picture-in-picture feature. We're working. What is the picture-in-picture feature? What does that do? What does the picture-in-picture do? I don't wanna touch it and it mess something up. I don't want to touch it. What is this supposed to do? Does it allow you to look at the call and go to like?
Yeah, I can have you on the screen in a small corner
Mm-hmm.
while I'm looking at the charts.
Okay. Does it work for you?
It used to work. Not today. It's not working today.
Interesting.
I think since WAP made some changes, things are just
Yeah, I don't know. Yeah, I gotta.
faulty.
I don't see what's going on. I gotta get used to what. As long as price maintains above the support, then buys are valid. If price starts trading back below, then those sales will be valid because this would be the previous area where price would break above. It doesn't come back down to retest and hold a support. This would be that overlap. And if price overlaps after already breaking above this area so many times, price will drop potentially. If price breaks above, then just comes immediately right back down below. That's what those whatchamacallit, what did we talk about? The overlaps. That's what a liquidity sweep looks like. That's exactly what a liquidity sweep looks like. You have your highs where people put their stop losses right here. They put their stop losses right there. Price comes up and stops them out, and then the market immediately rejects and goes to the opposite direction. That's the simplest terms of what a liquidity sweep is. Same exact scenario here. People that were looking for buys, look what happened. People that were looking for buys here, they had their stop losses right below here, came down, and they came right back up. As simple as that. That's how liquidity sweeps work. Oh, sales are valid. Sales are absolutely valid. Sales are valid for the time being. Anything can happen within minutes, but price did reject it. Price did create the higher low at that area. Price is actually creating higher lows now. Let me see. Let me see. Yeah, to the 5 minute. Interesting. Price came up to the highs. Let's see. Oh man. Let's see. Let's see what happens. Let's see what happens. 4 seconds left. This looks like a clean sell to me. This looks like a clean sell, not even to me, to the system. This looks like a clean break and retest. A clean break and retest. If it continues to keep going bearish. If not, and it starts to break above the highs, it sells right the second, and not valid to me. One, two. See what happens. Price gonna start breaking back above or coming to trade lower or higher. Okay, price is failing. Yeah, price already rejected it twice. Then it broke back above, especially if price breaks above the highs. Price has a high probability of continuing to keep trading up now, especially that it already overlapped it. Price has a high probability to keep trading upwards now, breaking back above the highs. 1 minute is still creating higher lows. That 4 hour candle is absolutely insane. That 4 hour candle looks insane on gold. But let me see. I'm just gonna let the market, cause that's all that's going on here. I'm going to wait, cause if the market pulls back up, which it looks like it's on its way to do, if the market pulls back up into this zone and successfully holds as support, this isn't no 5 minute time frame. This is no 5 minute setup. This is a 4 hour setup. Because what would happen is there's still 2 hours left into this candle. The same exact concept on the 4 hour time frame. If that happens on the 4 hour time frame, it's a higher probability chance prices are going to continue to keep going down. If, especially if price maintains. So price already broke below. If price pulls back up and it maintains as resistance, it's a high probability chance that price could keep on going back down. And for me, if I ask, this is the internal area, but where's the next area of support? Down to here. Now, if that's not the case, and what would make buys valid if price comes back, closes back above, and then starts to hold as support, and it doesn't start trading back below here, then buys will be valid back up into the highs. Can't get more simpler than that. It can't get more simpler than that. I can take all of this off because I already know what I'm looking at. Can't get simpler than that. GU, UJ, the UJ price is still rejecting this area. This is UJ could be a setup. UJ could be a setup here pretty soon. Because I already got the shift of structure. And now all I need is the confirmation. See, boom. The markets are looking good today. The markets are looking beautiful today. I don't know what happened, but whatever happened, the markets are looking absolutely beautiful. this is one of those times on UJ where this not gold. I don't need to be in a 1 minute time frame. This not gold. I can enter based on a 5 minute candle closure. UJ ain't doing what gold doing right now. What I could potentially do is enter if I get the opportunity. Enter a trade on UJ, hold it for however long it takes for it to get to that area, and while that trade is doing its thing, wait for gold to give me a setup and flow with gold as well. You cannot make this up. Support resistance is beautiful. Support resistance is beautiful. The candlestick didn't close above the high to create that morning star. So that means that setup for the buy was irrelevant. I just had the two there. If price were to close above, then I would have taken a buy because a little bit of water star. But price did not do that. Now price is creating a higher low. This was that zone that I was potentially looking at. This area right here. The price respected time and time and time again. It held a support here, held a support here, held a support, boom, broke below, held his resistance, held his resistance, held a support, broke above. Very simple. If price does give me a candlestick entry, then I could look to take the trade, and I will look to flow up into the main flow state, which is still up here. As long as price doesn't do something crazy and close all the way above here, because if it closed way past here, that would invalidate my 1 to 2 minimum. So I wouldn't have been able to get in there. And the way that like I always look at it is the initial, as long as the initial trade is a minimum of a 1 to 2, it's okay to me. I'm cool with that because I know that I scale in. Just because I have a 1 to 2 R multiple, a 1 to 2 R plan, that doesn't mean I'll end the trade off with a 1 to 2 R. I could end the trade off with a 1 to 15 R if the market gives me more opportunities to scale in, because that first initial entry may just have a bigger stop loss. And then the next entries may have a smaller stop loss based on structure and precision. That's how I look at it. As long as price doesn't just shoot all the way up in one candlestick and come all the way up here, then in the next 3 minutes, however this candle closes will tell me what I'm going to do. Price already gave me the lower high, lower low, lower high, lower low, higher high. I already got the breaker, the shifter structure. Back to the bullish side. The 1 hour is already bullish. So now all I had to do was wait for the 5 minute to align bullish. And the 5 minute is currently aligning bullish. What would invalidate it aligning bullish is if price were to come down and just break below these lows. That would invalidate that the market is going bullish right this second and is just trading within a range. So if I were to take a setup, depending on what the market gives me, if the market gives me an entry opportunity above this zone and price is maintaining above, I will classify this setup as a domain expansion because price is trading sideways in a range and price is going from the bottom to the top, from the bottom to the top, from the bottom to the top, boom, it stops, it doesn't come back down into the lows, creates that higher low, off to the races. And if that is the case and I get multiple opportunities to scale into the trade, then that's what I would. What is going on? Why is it not stopping? What is going on? No, wait a minute. Yo, what? Yeah, something right. Hold up. Whatever. And I can have multiple opportunities to scale in because I can enter here depending on what the market gives me. And if price closes above within the next, now I gotta wait two more candlesticks, two more 1 hour candlesticks. So 10, that'll be 11, 12. So close to the 4 hour candle closer, or close to 12 or 1. Let's see. However, this candle closes is gonna determine if I enter or not. If it's tweezer bottom, I'm entering. If it's a bullish engulfing, I'm entering. Marabouzo, I'm entering. A hammer, I'm entering. Any bullish candlestick, I'm entering. And I'm going to give my stop loss the breathing room, let it do its thing. Price actually did close this one candle. It actually closed above. It didn't close like super crazy above, but it did close above. It did close above the high. It also closed above this previous high right here. Price could potentially come back down, create a wick, create the higher low, off to the races. Regardless of what it does, I am in the trade. So I'm just going to hold the trade for however long. Boom. I can take that off. I can keep this on. Entry was here, stops below support. If price fails to maintain, because this setup is a domain expansion, for me, when I do my domain expansions, I put my stop loss below that point right here. So I'm just giving it some breathing room below here. If it was a bounce play, then I would put my stop loss below the support down here. But because for me, if the setup is classified as a domain expansion, that means that higher low is more times than not, once price creates this higher low for a domain expansion, is going to continue to keep going bullish, and price won't, unless the setup would tell me is invalid, if price starts to continue to reject this area and then come back down to start breaking below, then that shows me that that is still in a range, and this specific setup right here is no longer valid, and I would take the loss here. And if price is going to bounce off of here again, I'll just take a bounce play and get a better entry and a better R multiple. I would make more money if price were to give that setup. I would make more, a better R multiple off of taking a loss. So entry, bullish candlestick, stops are going below support. I'm not going to put it directly right below here, putting it below the lowest points that I see right there. We got gold pushing up. Gold is pushing up closer and closer to this support area. Definitely want to see how this closes. What I really want to see on gold, that's really going to determine a lot, is how this 4 hour candle closes in the next 2 hours. Even though there still can be setups, that doesn't mean that I'll have to wait that long, but a lot can happen in 2 hours that would determine if this is a overlap. Because if price wicks down here and it closes back above here and it continues to keep trading back above here, then I'll look for buys back up into the highs. So with gold, it's a lot more about patience. Missing out on this move, you got to be okay with that. Got to be okay with that. Gots to be okay with it. Gots to be okay and say, hey, it is what it is. I missed out on a move. Come back tomorrow. Come back later on. There's still going to be setups. Put this into perspective. Like I said this before. If you analyze gold, every last one of you can analyze gold and just even use the session indicator. You don't have to be actively trading gold all the time, but just use the session indicator and analyze gold every single session. On average, gold moves 300 pips every single session. London session, New York session, Tokyo session, Asian session, it don't matter what session. Gold moves on average 300 pips every single session. Turn the session indicator on. Look at it. Obviously, we clearly know gold move way over 300 pips there. But even if you, a lot of people would not like to trade Asian session because the world and the systems that the world teaches us is Asian is the worst session. So we can make 3,000 every session. Listen, gold moves 300 pips on average every session, but the systems that the world has taught us, the trading systems that we have been taught by the mass majority is stay away from Asian session. Not everybody says this because there's a lot of people that trade Asian session, but majority of the world teaches us don't trade Asian session. If you trade Asian session, you're gonna lose money. It's too much. It's no volatility. You're gonna like that pushes fear into people. You can't tell somebody that if they have a system that works around that. You could only trade gold during Asian session because that's what your system, they were gatekeeping with fear. Absolutely. Absolutely. That's what a lot of people do. That's what I've observed. That's why my purpose is to do the opposite of that. That's why I want to guide people to where they don't have to rely on others and rely on other systems. You can create your own things. I want to show you guys. That's my whole purpose. That's what I'm not even a trading mentor no more. Like I said before, I'm a systems coach. That's what I would classify myself as. Because systems, I can create systems and help people create systems for any category. But you want to get to the point where you don't have to listen to anybody. And the reason how you know that you don't have to listen to nobody no more, because you know how to actually go into the charts and see if they work for yourself or not. You know how to go on the markets and see, okay, the world teaches don't trade Asian session because you'll lose a whole bunch of money. Let me go actually do this myself. How do you actually, you got to know how to actually be able to come and see the setups during Asian session and see if you can back test it and see over the long run. You got to know how to have a system in place for you to back test it at first to see if it works during Asian session. For me, I don't need to back test to see if trading gold during Asian session works. Some of the biggest moves that I've caught were during Asian sessions on gold, especially during that huge rally. Just about every Sunday, market reset. Those when those big moves was happening on gold. But if you just look at gold on average, right? Every single day, gold moves on average 300 pips every single session. That's 1,100 pips. Asian session. That was that big move. That was with the war. This next Asian session. Same exact thing. Same exact thing. 1,000 pips. Asian session. Even this right here. Even this. This is a perfect example. This looks like a little bit of a movement. This don't look like this. This don't look like this or this. No. This got to be like 20 pips, right? 20 pips on gold. Minimum. Maximum. Not minimum. Maximum. 20 pips on gold. Maximum. This looks like 300 pips to me. This looks like 300 pips to me. 300 pips during the Asian session. The reason why I'm keep saying Asian session because obviously London and New York session are gonna have over 300 pips, but Asian session is so called the dead session. Nobody should be trading the Asian session. 500 pips. 700 pips. I'm not even looking at that. That's definitely over 300 pips. What we got? 500 pips. What is this movement? From the low to the high. 500 pips. From the low to the high. 600 pips. You guys get the point? That's clearly over 300 pips. That is clearly over 300 pips. Do you get the point? Boom. 600 pips. Boom. 800 pips. Okay, here we go. Another one. This can't be 100 pips maximum. 100 pips maximum. 100 pips maximum, right? How many pips is that? 300 pips. There's a reason why I specifically said 300. I've studied this. I backtested this over and over and over again. On average, calculating how much it moves during each session, I actually took the time to study that because I wanted to break free from that system myself, because that's my whole point. My whole point is to actually break free from all the systems that the world taught me and learn the actual right way to do the system, or the way that's right for me. And one of the things was I used to get caught up in the only trade in London session, only trade in New York session, and this is not a 9 to 5 to me. So why am I treating this like I'm at a 9 to 5? If people want to do that, because a lot of people do that with New York session, that's perfectly, everybody's system is their own system. I really don't care because they all work. But to be fear mongered into not at least seeing what works best for you, that is where it's not nobody else's fault. It's not the person who tells you that, you're dumb for trading agent session, don't trade agent session. It's not their fault. Anybody that says that you shouldn't be doing that and that fear monger you, it's not their fault. It is our fault. It is your fault because you listened, and you listened instead of actually trying to see it work out for yourself. So if anybody says that, it's stupid to do this, you got to trade this way, you got to trade that way, and if you're just fear mongered into it, that's not you. That's your fault. That's nobody else's fault. You got to go look at it yourself and see if it works for yourself, because you could go try it and it works for you, but for them it didn't work. If people work a 9 to 5, of course it makes more sense to have a specific schedule around trading that works for them in their system. Maybe for this season, because just like I said before, seasons change. There's a time and season under the sun for everything. Do you plan to work at your 9 to 5 for the rest of your life? If you don't, and you understand that during this specific season, let's say that you only could trade agent session. You can only trade gold during agent session. Let's say you work your job, you got family, kids, whatever. You work 9 to 5, you clearly can't trade New York session, and London session you be asleep because you got to get up and go to work. An agent session, that 7 o'clock to, I don't know, what time people usually go to sleep? Like 10? Or let's say you get off of work at 5, let's say 6 to 10. Let's say like 6 to 10, right? That 4-hour period, there you can 100,000% make a system by trading gold from 6 to 10 every single day, and you can make money consistently. If you build your system around this season that you gotta have, when you get to the season when you can trade, gold at any point in time of the day that you want, or trade gold in a general, then guess what? You can adjust your system to that. But you got to actually put in the work to do that. You got to actually put in the work. If you can only trade agent session, once again, let's say you could only trade from 6 to 10. There was for sure opportunities here. There was for sure opportunities 6 to 10 here. And I wonder how many pips this was. I wonder how many pips. Maybe 100 max. Gotta be 100 max. Interesting. 500 pips. Even when the market is moving sideways like this and it looks like it's not big movements, this is still 500 pips is still 500 pips. 500 pips is still 500 pips. A standard lot size with 100 pips is $1,000. If you get to the point where you can consistently use, and then on top of that you understand your trades as well. If you know, prime example, if you know on average, we clearly went over this, and I can go back years. I can go back so many times in the past. But if you know on average gold is moving 300 pips in a day, why are you targeting, not a day, a session? Why are you targeting 50 pips? That's what I told myself. If I know on average gold moves 300 pips plus each session, why am I targeting 50 pips? I don't even care about pips anyway. But why am I hesitating to get in during Asian session? Why wouldn't I put my same risk that I would during London session during Asian session? Prime example. I'm glad that this is up right now. Look at this. Asian session. Look at what the market dropped. That is a whole lot of pips. Must have been a Sunday. Yep, Sunday, of course. That is a whole lot of pips. 1,000 pips. But price dropped this much during Asian session, and look what happened. It didn't even move. It moved half of that during London session. Dropped all these pips during Asian session. No, New York session, sorry. New York session, even New York session and London session. London session was not compared to that one, and neither was Asian session, New York session. Asian session actually moved more than London and New York. Probably combined if you combine the two movements of the two. Here's another example. Asian session moved more, probably didn't move more than New York session, but it moved more than London session. Asian session, I wonder how many pips this is. Gotta be 100, right? Oh, wow, interesting. Look at this. This Asian session, it moved more than London session. You can do 1,000 examples over and over and over again. I think you guys get the point. But when people try to fearmonger you into certain things, don't blame them. Blame yourself for not testing it yourself. That's what I do. I blame myself. It's my fault. It's my fault that I listened to the people that told me not to trade Asian session, not to trade gold outside of session, not to trade NAS or indices outside of session. That's my fault that I just listened to them verbatim and didn't try to see it for myself. So when I actually did it and see, wait a minute, I actually can trade not just gold, but I can trade any pair during any session. I entered this trade on GU outside of London and New York session. GU, the pound, London session, the US dollar. Wait a minute. Something ain't right? I'm doing something wrong. Gotta be. The pound is London session. The US dollar is New York session. So that means, according to the systems, I should only be trading GU during London and New York session. But Asian session price moved 120 pips. London session price moved. Where's the low? Oh boy. 65 pips. And so far during New York session, prices moved 60 pips. So you combine London and New York session, the amount of pips that it moved, that totals what Asian session moved in one session. Asian session had the cleanest drop down. It still dropped a little bit during London single pair. Look what happened during GU. The biggest move. Well, this was from the war. So this is why this happened. But Asian session price still moved more as well. GU, even if let's say you don't trade gold, you want to trade indices, not indices, forex pairs. Asian session, 50 pips. Asian session, 50 pips, 60 pips, but Asian session, 50 pips. Asian session, 30 pips. 30 pips. Get you some scalps in. You can do a lot of damage with 30 pips. You use a bigger lot size, you can do a lot of damage with 30 pips. Because if you're gaining 30 pips, your stop loss is not 30 pips. You have like a 5, 10, 3, 4, 7 pip stop loss. So that means you can use bigger lot sizes. Let me take this off. Yeah, I gotta wait a whole nother candlestick on BJ. Yeah, I'm done. I am done staring at the charts for today. I have been trading since 7 p.m. last night. I wasn't staring at the charts all night from 7 p.m. I was doing a lot of editing and stuff as well, but and reading my Bible, doing my Bible study sessions. But that is going to be it for me for today's session. I will see you guys tomorrow within the community. And to everybody that joined the stream, I appreciate you all for pulling up. See you all tomorrow. Hope you all have a blessed, beautiful, and amazing day. I'm gonna get some sleep. Hope you all have a blessed day. Got to end it on YouTube.